Mike. Hi, guys. Glad to have everyone here today. So what we're going to focus on in this session is just broad legal issues that you need to keep in mind when launching a fintech in the UAE, whether it's a startup or whether you are porting a fintech that's already established in another jurisdiction to the UAE. So just, a quick overview on the firm. So BSA is a law firm that is headquartered in the DIFC, but that has offices in multiple countries across the Middle Eastern region. And we have multiple offices, about over 15 partners, 22 languages, yada, yada. You can see the marketing spiel. Okay, we can go to the next slide. So just a bit about what the purpose of the session is. First of all, all of you guys are at a different stage in the life cycle of your fintech. And so the first idea is to kind of identify where you are and identify, what needs or what legal issues might arise for you, depending on where you are in your life cycle. The second thing is to really understand the different regulatory frameworks that are in place in the UAE that you need to keep in mind if you want to provide products and services in the UAE. And the last one is sort of to explain why it's important to identify legal issues now and not wait until it's too late. So we can go to the next slide. Contents. Okay, we can go to the next one. We're going to start with the overall regulatory framework in the UAE. So for those of you who, let's say, are not based in the UAE and don't have any operations, just for you to understand, how the UAE is structured. The UAE is a federation made of 7 different emirates, and each emirate has their own specific emirate laws. There are also laws that apply on a federal level. So that's something to keep in mind. There are multiple free zones, over 30 free zones in the UAE. Again, each one of these free zones has different legislations and different things, different items from a regulation legislation perspective that you need to be aware of. There are also 2 common law free zones in the UAE. That's the DIFC, where we are right now, and the ADGM. The difference here, again, is that these common law jurisdictions have regulations and legislations that are based on the English common law, as opposed to all of the rest of the laws in the UAE, emirate level, federal level, which are based on the civil code. And lastly, there are 4 major regulators that you need to be aware of. We're going to talk about them a bit later, but you have the DFSA here in the DIFC. You have the FSRA and the ADGM, the UAE Central Bank, and the SCA, Securities and Commodities Authority. So we can go to the next part where we sort of talk to you about the main regulatory authorities, as I just mentioned them. First one is the UAE Central Bank. The UAE Central Bank, as is self-explanatory, regulates all banking activities in the UAE. In 2018, they passed a new legislation which sort of revamp the entire way that they regulate banks, how they deal with financial institutions. And it's a pretty landmark law because it's brought the central bank, the UAE Central Bank, let's say, into the next phase of its development. Another aspect to know from an insurance perspective, insurtech perspective, is that now the UAE Central Bank also regulates the insurance sector. Previously, the insurance authority was its own standalone regulator. They've now merged underneath the umbrella of the central bank. The next regulator that I'd like to talk to you about is the SCA. So the SCA, the Securities and Commodities Authority, the equivalent of any other securities regulator anywhere else in the world. They regulate the provision of securities in onshore UAE. So that does not apply to the DIFC where we are or the ADGM. And mainly, the SCA deals with listed companies, but they also deal with any type of financial institution onshore that is trying to provide financial services to any individuals within the UAE. The next regulator is, or the 2 next regulators, the DFSA and the FSRA. So the DFSA regulates all the regulated companies that are in the DIFC. The FSRA does the same for all regulated companies that are in the ADGM. And they both have their separate regulatory frameworks, completely independent from the central bank and from the SCA. and again, working under this common law umbrella, which is again quite different from what is onshore. I think we can move now to just very briefly talk to you about some of the new legislations that have come out over the course of the last 2-3 years that are important for you to know from a fintech perspective. And again, this might apply to your business model, it might not, but it's just good to be aware of it in any case. The first legislation is I want to talk to you about a dinosaur legislation, although it's not that old, 2017, but this piece of law was the first law that was enacted by the central bank, which kind of addressed electronic money, stored values, anything of the sort. And it was the first attempt at any piece of legislation in the UAE to kind of address these areas. This law was repealed last year in 2020 by the UAE Central Bank's Stored Value Facilities regulations. And so we call this SVF for short. So the SVF regulation was pretty landmark for the UAE because it really brought this idea of stored value into the level of international standards, let's say at the EU level or at other levels around the world, where there's a clear understanding of what stored values are, but also opening the opportunity for companies that are fintechs and that are not already established, regulated companies like banks or money exchanges to be able to provide services that have to do with stored value. So from a legal perspective, this is a big deal. There are more laws expected coming from the central bank soon, specifically on payment systems regulations, and you should keep an eye out for that if that is your business model or that might be something you want to provide. On the DFSA side, the DFSA general module is a wealth of information when it comes to regulated entities, and categories 3A to 3D are especially, I would say, probably important with what you're trying to build. It could be category 4 as well, but this is the kind of these are the kind of legislations you want to focus on. It talks about, in essence, everything that has to do with providing securities, offering financial services, taking client money, holding client money, providing money services or e-money services or anything of the sort. Then the SCA, again, if your business model handles anything to do with crypto, the Securities and Commodities Authority issued a framework at the end of 2020 regulating the provision of any type of crypto asset activity. And the ADGM has done the same as well back in 2018, 2019 as well, providing their own framework. So what we've done now, we've set the scene in the UAE. Again, for those of you who don't know much about the jurisdiction, who the main regulators are, what are the main bodies of law that you need to keep in mind. And now we're gonna kind of get into the nitty-gritty of the session, which is to talk about the big six, as I like to call them, the big six legal issues that you need to keep in mind when you are trying to set up a fintech in the UAE. So we can move to the next section. And I say big six, really, that's just to have a title. There are probably 7, 8, 9, 10, but I've kind of boiled this down to 6 big things that you need to keep in mind, and that might be applicable to you or less applicable or more applicable, depending on where you are in your growth, at the stage of your growth, at your life cycle. We know that you guys are all, you have a concept, you have an MVP, whether you've launched it in another jurisdiction or not. These are things that, you need to keep in mind. So the first thing is to talk about co-founders. And if there were full of people here in the audience, I'd do a show of hands, but we can't do that. But I'm sure that you guys all have co-founders, and that you're not kind of doing this by yourself. If you are, kudos to you. But if you have co-founders, then comes the important topic of who does what, who's responsible to do what, and who is receiving what for their contributions. Very important to have some sort of framework where you have decided with your co-founders or co-founder how you're going to be running your business, how you're going to be taking decisions. Are there going to be any decisions that maybe one of you has more of a say in, given their level of experience or expertise, or given the sweat equity or even a capital that they've deposited if you're not, let's say, 50-50 co-founder. And how you tackle big decisions. If someone comes in and says, hey, I want to invest with you, who can make a decision whether you want to accept this person to come in? So all of these points, would be nicely summarized in a shareholders agreement. And there are a lot of shareholders agreements available out there, a lot of tools that you can use. You can get some sort of document kind of building the frameworks of the important points you need to agree on as shareholders in a business. And it's important to get this right from the beginning, because if you don't get it right, then when you're going to be faced with a situation where an important decision has to be made, you will not have a guideline of what to follow and what steps to follow in order to make this decision properly for the best interest of the company and for you guys as well. Now, a lot of people ask, well, I'm a startup, do I need a shareholders agreement now? It's an expense and I don't want to spend that money now. And any lawyer will tell you your money is better spent to hire a lawyer before you have a problem than afterwards, because afterwards will always be more expensive. That being said, again, there are a lot of easy tools for you to be able to access documents, shareholders agreements, templates that you can build on and work on, and then work with a legal professional to fine tune and make sure that it fits your business model and the way you like to interact with each other. The second point is to do with corporate structuring and regulatory considerations. So again, a lot of the questions that we get as lawyers from startups is, well, okay, where should I set up my company? How should I set it up? What kind of company should I set up? Or they come to us and they say, we've built a platform, or we've built an application, and this is what we want to do. And now we're trying to figure out, well, is this regulated or is it not regulated? And if it is regulated, under what umbrella does it fall under? What are the requirements from a regulatory perspective? How much money do I need to put down? How many employees or level of experience do I need to have from day one? These are all important questions to ask and important things to get right from the beginning. You don't want to be in a situation where you've come up with, you've gone from an idea stage, you've built something already that's ready to go to market, and then you realize, well, my structuring is not right. Whether it's from a company perspective, the most adequate structure to be able to, let's say, attract investors, if that's what your goal is, if you're not only bootstrapped, and from a regulatory perspective, where you don't have a regulator coming in and saying, well, you know what, you're not allowed to do this, and I'm shutting you down until you get the right license. Again, these are problems that you might think would cost a lot of money to figure out or resolve or answer now, but figuring them out now, as opposed to waiting until you get sent a notice to cease operations, or you have gained attention from an interesting investor who wants to come in, but you don't have the right structure, and now you have to run around trying to get that structure right so you can receive the funds. All in all, to say that it's the best thing to do is to kind of get your structure right, understand the regulations properly, and use the tools at your disposal. So, with this accelerator session that you're at now, you have the opportunity to sit down and have one-on-one sessions with multiple partners, including the legal partners. Sit down with them, ask them questions, get answers to what your issues are now, or what your clarifications that you might need, so that you can avoid being in a situation that I mentioned earlier. So the third issue has to do with IP, of course, registering IP. I guess the first point would be to really understand what part of your business model is IP. Is any of it protectable? Can you register it while you protect it? Or is it just like a company secret or a trade secret? And really understanding, what you can do to protect all the hard work that you've kind of done so far, and make sure that nobody comes and tries to replicate it, or you don't have an employee that comes and decides to just take all the content and kind of run their own thing and leave you. So when we talk about registering IP, the first thing, as I said, is to identify what is your IP internally in the company. The second thing would be to identify who owns it. Is it the company itself that owns it? Is it held within in the ownership of the two co-founders? Is it something that needs to be registered so that you can have additional protection? The third thing then is to understand who's handling it. So do you have, have you hired someone to kind of create something for you? If you have, are you sure that whoever is creating this IP for you doesn't own it because you're creating it? Are you sure that you've allowed for enough language in whatever agreement you've signed that will say that you own the IP, although they're the ones writing the code or creating the platform or whatever it might be. And again, IP is something that you don't want to mess with. It's the building block. It's the core of your asset, of what you're building, and you want to make sure it's protected. You want to make sure nobody can copy it. You want to make sure nobody can steal it. And I guess the last point to do with IP, which a lot of time is sort of a segue into cybersecurity, is make sure that your IP is protected also from any kind of threat or attack. Okay, you might say, hey, I'm a startup, or hey, I'm just launching, or I've only been in existence for a year. Who am I? Nobody's going to target me. But just from a best practice perspective, and that's something that we haven't really covered here, but I'm covering it in each bullet point. When you do talk about investors coming in and wanting to invest money in your startup, they're going to ask these questions. They're going to ask, okay, where's the IP? Who owns it? And then also, do you have the right protection mechanisms in place to make sure that nobody can steal or take that IP away from you? Okay, the next point is employment decisions. Again, there isn't much content up there. It's mostly me talking, but I hope that's fine with you guys. So on employment decisions, another one of the big topics that we talk about when we deal with startups is, well, first I'm hiring employees. Are they full-time? Are they freelancers? What's the right framework in the UAE? So in the UAE, you now have the ability to employ people full-time and employ freelancers, which is a good thing. And it helps, definitely helps startups. The second big question that we get is, well, I want to remunerate these people, not just in a salary, but I also want to give them options, stock options. What can I do? Can it be done in the UAE? Is it enforceable in a court of law? And what's the right structure to have? And this is something that questions that we've been getting more and more. Maybe, 4 years ago, the concept of options or ESOP programs were not really, let's say, ingrained in the mind of startups in the UAE, while they have been in other jurisdictions. But this is gaining steam, and more successful startups are deciding to provide for that and make sure that they allocate shares to an ESOP pool where employees can be remunerated. So when you talk about ESOP, ESOP stands for an employee stock option program. You need to make sure, first of all, that you have some sort of, let's say, charter or guideline as to how an ESOP program would work. How can someone actually get these options? When do they vest? When can they be sold? Can the company buy back these options at any point in time? All of this should be set out in a sort of a charter or like a guidebook, Q&A, FAQ, whatever you want to call it, and then an actual option agreement that the employee will sign with the company to allow them to receive that option. We're also finding, by the way, that it's not just startups coming and asking for this, but employees who work at startups coming and saying, well, hey, I want to work for you. Do you have an ESOP set up? From an issue or risk perspective, it's important, again, to get the structure right, to make sure, one, that it's enforceable, two, that if you do have an investor coming in wanting to invest, whether it's equity or through a safe note or whatever, making sure that this ESOP pool is actually protected and will not form part of, or will not disappear if you do have an investor coming in and getting equity in your business. So that's it for employment decisions. The next one is data protection. Again, data protection is a hot topic, and in the DIFC, there is a standalone data protection law, something that you need to keep in mind if you do want to set up in the DIFC. But I would say keep in mind no matter where you want to set up, because the ADGM has their own data protection law as well. And in UAE onshore, while there is no specific data protection law, there's been an announcement a few weeks ago that a data protection legislation is going to be enacted very soon. Onshore as well, there is a data protection law that specifically deals with healthcare. So we have let's say we have clients that are in the health tech space, and from their perspective, any type of transactions that they have, whatever kind of data that they receive or collect or process, patient data, whatever it might be, they need to keep in mind that they need to abide by the regulations that are onshore of the health data law. So that's a bit of an overview on data protection. Now, in terms of legal issues, what you need to keep in mind? Well, the first thing is that you need to first understand what are you collecting like data. Kind of like with IP, do a data inventory. Inventory, where are the points that I collect data from? Where do I store this data? And what do I do with the data? And the fourth question is, do I actually need to be collecting this data? But we'll get to that in a minute. So first, identifying, what kind of data you're collecting, trying to figure out if it's data that's deemed as sensitive data or high risk data, and also understanding where it's being stored. Are you storing this on, your laptop, or are you using a cloud service storage? Is it located in the UAE, or is it being sent out abroad? Does your business have any sort of data localization requirements that you need to keep in mind? So these are all questions that you need to ask yourself. And these are points that you need to watch out for to make sure that you're not violating any data protection laws, number one. Number two, that you're not exposing the individuals from whom you're collecting the data to having their data be leaked or stolen or whatnot. And then, the fourth point, as I mentioned, which is once you figure out what data you're collecting, ask yourself, do I need to collect this data? A lot of times when we sit down with startups and kind of do this data inventory exercise, we realize that there's a portion of data that they're collecting that they don't need. And remember, the more data you collect, the more requirements you have to keep in mind, the more you have to make sure that it's protected, and the costlier that is going to be. So understanding and kind of sitting down and doing this exercise is very important for you to be able to have a very clear idea of what you're doing. The last point, which deals with pivoting, and the reason why we kind of added that, used to be the big 5 legal issues, now it's the big 6, because so many startups have been pivoting over the course of the last 18 months, especially with COVID, realizing maybe that a certain model doesn't work or wasn't going to work in a certain period of time while the pandemic was at its peak, and understanding that I need to pivot, I need to kind of continue moving and try and move into a different space. So the legal implications of that, whether, again, if you're moving from a non-regulated to a regulated business model, or vice versa, if you're moving from a regulated to a non-regulated model, and understanding what that means. Do you need to, again, are you either having costs that you don't need to have, or incurring costs that you don't need to have from a legislative perspective, and can you cut those down? Understanding whether, when you do pivot, whether new laws now, you need to abide by any new laws, and also understanding what that means for your investors, if you have any investors, and for your employees. If you have reached a certain point of maturity and you have onboarded investors, these investors might be expecting you, or you might have certain KPIs or milestones that you need to hit. By pivoting, you might be changing all of that. Make sure that the investors are on board, continue having dialogue with them as you go along, seek their feedback. Ideally, you want to have investors that can have added value and not just be cash cows. And if they are these people who have this added value, seek out their opinion, seek out their advice. And also from as we said, on the employee side, make sure that your employees are aware, as well as, is there anything in your contracts and the agreements that you've signed that might affect your ability to pivot? Is there anything from an IP perspective, again, from a data protection perspective, that might affect your ability to pivot? And will it lead to more complications in the long term? So these are things to consider or think about if and when you do want to pivot. Now, before moving to Q&A, I just want to say one last thing, and that's on fundraising. I haven't covered it here, but basically, as I said, it's sort of when you do think about fundraising, all of these elements are important to have right before you fundraise. Now, it's not a perfect solution. I'm not saying that you're not going to be attractive to investors if you don't have all this right, but you'll definitely be more attractive to investors, and investors will appreciate the fact that you've gotten your ducks in a row and everything in order if you are going to be moving to that fundraising stage. We've seen, we've been part of, let's say, fundraising fundraises or fundraising exercises where the investor did not care how discombobulated or disorganized the structure was. They didn't care that there was a bunch of options that were signed left, right, and center that were not properly put under an ESOP charter, because the business was so attractive and they wanted it so badly that they were willing to buy it as it was, right? But that's not always the case. So making sure that you have everything in order from these 6 points will help you be a more attractive package to investors that you're trying to, and partners that you're trying to attract. So that's it from our side, and happy to open the floor for questions.
All right, everyone, we're going to move on to the Q&A section right now with Nadeem. So first question from Santiago: are phantom shares also an option in the UAE?
Good question, Santiago. Good question. Phantom shares, well, let's take a step back. Let me maybe explain what phantom shares are. So in an ESOP, you would have, if you had 100 shares in the company, you would allocate, let's say, 5 of those shares or 5% of those shares to an ESOP pool, where if at any point in time, employees who got an option to get a share, if that would vest, those shares would be taken from that pool, right? So you have 100 shares and 5% of that is allocated to the ESOP. In a phantom share model, what you have is those 100 shares are allocated to the company. There is no ESOP pool, but the company will then sign an agreement with the employee saying, hey, by the way, although I own 100% of the shares, we're going to agree that you actually own 1 or 2 shares on the side. So in essence, it's sort of like a contractual arrangement between 2 parties. Whether it is an option, it is an option. The question really is how enforceable would it be? And that would depend on where you have incorporated your company and on what regulations you fall under. Whether you fall under the onshore regulations, whether you fall under the DIFC regulations. So depending on where you're setting up your business, that would be the enforceability of those phantom shares is important to understand. The other thing to keep in mind is a lot of times, you set up an entity here, maybe in the UAE, that's an operating company, but your holding company is in another jurisdiction. It would make sense for you to provide those shares from your holding company and not your operating company. And that holding company should probably be in a jurisdiction where you should be able to enforce these types of arrangements.
All right. Thank you for that. So from an anonymous participant, you mentioned we can have one-on-one meetings with you guys. How and where can we book a slot?
So that's back to you.
So guys, you can have one-on-one meetings with the BSA. If you are interested, please do send me an email and I will connect with Nadeem and the team to see when we can fit you guys in for the one-to-one sessions. I presume that it would be in the next couple of weeks before your speed dating round begins. Next question. Okay, next question. Do we need to have a co-founder from a UAE citizen?
Good question as well. Again, that depends where you create or you establish the company. If you establish it in a free zone, then you definitely do not need a UAE citizen to be a shareholder. If you establish it onshore, until a few months ago, you would have probably needed a UAE shareholder. Right now, depending on your activity, you may or may not. There are a lot of activities that have been put on what they call a positive list, which means that these activities can be owned by a non-UAE shareholder at 100%, but not all activities fall under that umbrella. So you'd have to kind of look into see what activity you want to undertake, number one. Number two, figure out whether the best place for you to incorporate or establish your company is in a free zone or onshore.
Let's see if we have any more questions. Come on, guys. Access to Nadeem right now. Oh, we have a question from the audience. This is amazing.
Thank you. Hi, Nadine.
Hey.
Thank you for the presentation.
Sure.
Amazing one. Wanted to ask you, is it always good to separate the operational entity from the holding entity? Meaning, do you need really to create a holding entity that owns the startup? Or, simply stick with your operational entity, and from there you, for example, distribute shares to other shareholders?
Got you.
Thank you.
Good question. What's your name? Mufid.
Mufid, yes.
Mufid. Good question, Mufid. Really good question. I think, there's no hard and fast rule. There's, let's say, an ideal, and that ideal is, yes, that you have that holdco and you have those opcos wherever you're setting up opcos, might be different jurisdictions, etc. That's sort of, and I don't want to say traditional, but it kind of is that traditional model back when most businesses were brick and mortar. And not as digital, not as, let's say, focused on digital. In today's world, you might not need opcos, right? You might not need opcos in every territory you are, because you're able to provide your services online from anywhere, in essence, right? Or using one portal, one application, and not having to set up an entity in every country. So given that point, you might not need to have a holdco. I think it also depends on the life cycle of where you are. You might be at a situation where you're bootstrapped. Your aim now is to get your product to market and create as much as a buzz as possible and to grow your market share. If that's the case, you don't need a holdco. If multiple investors come in and then they start telling you, hey, we want to invest in your company, and you're like, well, which one? Because I have one in DIFC and one in onshore and one in KSA, and I've got a Delaware, and I've got a company in London. That's when you need a holdco, because your investors are not going to want, or you're going to have, if you have a savvy investor, he's not going to say, well, I just want the a share in the UAE operations. I want to share in everything, right? And that can also help you centralize a lot of things like IP, ESOP. You can centralize it at that level, but it's not a must, and it's a cost. So bear that in mind. It might not be something you want to spend on now, but you need to keep have it at the back of your mind. But like it's a good example because we're dealing with a startup now that is moving to the next level, right? They've created the buzz, they're there, and now they're moving to that next level. They're attracting investment attention, and now we're setting up their holdco and we're putting everything underneath. But we're in a hurry because they have investors coming in. They've got like a timeline. They've got a month. So now we have a month to put all this together, and it sometimes needs longer than that. So yeah.
Thank you. Great question. So next question is, if the co-founder is a non-UAE but GCC citizen, does it count as a local partner?
Santiago's back. Okay, if a co-founder is a non-UAE citizen, but it doesn't count as a local partner, it does not count as a local partner. Bearing in mind that, as I said before, a lot of activities now have gone on a positive list, meaning that you might not require a UAE partner. But if you do have, if you are trying to set up a company that requires a local partner, he has to be a Emirati. He cannot be a GCC citizen. The GCC citizen can own 100% of the shares by himself, but he can't be the quote unquote local partner or local sponsor.
Thank you, Santiago, for the clarification. We have a question from Fajr. If I was a buy now and pay after FinTech, and I'm having trouble getting my buy now, pay later loans from my customer, what can I do in a legal aspect to control the situation without losing customers?
That's a good question, Fajr. A very specific question. Look, it all comes down to, what kind of document are you signing with your, with your customers? And in a BNPL, you're taking the risk. That's the issue. That's the problem with BNPLs. There's so many around us, by the way. So I don't want to talk too loud and make them upset. But in the BNPL space, that's the problem, because you're taking the risk, right? And if the customer doesn't pay you, then you're left needing to pay the retailer or the bank or whoever you've agreed on the other side. So the easy short answer is you have to take them to court, send them a legal notice, take them to court, and debt recovery. That's what you have to do. You have to recover that debt. I would say also include language in the contract that you're agreeing with your customer to make sure that you have recourse in case they fail to pay.
Okay, thank you. We have a question from Hamdi. What are the benefits of...
I think there's Anand up there before.
Oh, and
maybe we can...
Oh, right. Sorry, I did miss that. Hi, if the company is registered in DIFC, can we offer our product in UAE for UAE residents?
The short answer is it all depends on what your product is. Sometimes you can, sometimes you can't. The DIFC recently changed one of the, let's say, founding legislations on the creation of the DIFC. And that change has allowed DIFC companies to actually advertise their products and services onshore. But for this, it really depends on the product. Some you could, some you might need. If you're a brick and mortar, you need to have a brick and mortar, available onshore.
Okay, now a question from Hamdi. What are the benefits of having a holding entity versus operating entity? We are thinking to set up a parent company later that will hold the IP rights.
Okay, Hamdi, that comes back to the same question that was asked by Mufid. The benefit of having a holding entity is for you to be able to structure what we spoke about earlier, the IP, the ESOP, and your investors into one company that is then attractive to investors. If you have multiple operating entities, your IP is split on all of them. Which entity would that investor put their money in? You'd then have to, the investor themselves might ask you to consolidate everything into a holdco. So the benefit of having a holdco is you're more appealing to investors because you have the right structure. But nonetheless, as I told Mufid, you could be in a situation where you attract the investors and then you decide to set up the holdco. This way you can kind of save on costs and your P&L looks better.
Alrighty, last couple of questions, guys, before we wrap it up. Question from Hyundai. Do you expect any significant changes / amendments to the current SVF regulatory framework in the UAE in the near future?
Okay, I'm gonna look at my crystal ball. Look, I can tell you that there's a PSP legislation coming. So anything to do with payment service providers, and they also released a large stored value legislation back in Feb 2021. But in terms of amendments to the SVF, I don't see anything coming soon in terms of amendments. The SVF is much clearer and more defined than the previous framework, the 2017 regs were. The 2017 regs were waiting for implementing regulations to come in to be able to allow these laws to kind of have substance. The SVF ones are actually way more developed and they have substance. So you can actually figure out under what rubric you fall under. I do think that they will be issuing certain circulars, clarification circulars coming soon, but that remains to be seen as to when.
Okay, last question from Rashid. What about setting up the company in the UAE from abroad? Does the situation require specific legal or regulatory constraints?
I'm not sure I understand exactly what you mean. I'm going to assume that what you mean is that you have a UAE, you want to set up, or you want a shareholder, your UAE entity to be owned by an entity that is abroad, right? I think that's what it means. If that is what it means, I mean, I don't see any specific legal or regulatory constraints. From a regulatory perspective, you need to think about where you're offering your product or your service and whether offering it in that jurisdiction is regulated. So that's the question that you need to ask yourself. From a legal perspective, there isn't really anything stopping you from having your UAE entity owned by a foreign shareholder or another company in another country, as long as you're allowed to do what you want to do with this company, and there are no restrictions, let's say, on ownership from a shareholding nationality perspective or expertise perspective or anything of the sort.
Okay, just because I can't leave a last question hanging, last one, where would you recommend opening that holding company you are talking about?
Yeah, that's $1 million question,
Yeah, boom, boom,
anonymous attendee.
boom.
That's probably why they didn't put their name. Look, I mean, it all depends. Again, it all depends on what your business model is, where your market is, and what makes sense for you. If you have operations abroad, you might say, you know what, the UAE or the Middle East is a small portion of what I do. You want that whole code then to be somewhere else, so to attract the investors who are more comfortable maybe with a Delaware company or a BVI structure or a Cayman structure. If you're focused here in the UAE, you have a lot of options in the Middle East for holdcos. The DIFC have a great structure, and that's something that you should consider. Again, depending on where your operations are. So yeah, that's what I would say about incorporating it. Cool.
Well, thank you, Nadeem, and thank you to
My
the
pleasure.
BSA team to running this bootcamp session. For those of you that do want one-on-one sessions with the BSA team, please do send me an email and I can connect with Nadeem to see if there are slots next week for you guys to have those sessions. Besides that, thank you very much for attending this bootcamp session. And the next session will be at 11 a.m. with Magnet. Thanks, everyone. Bye.
Thanks, guys.